Hey traders, welcome back to another Sunday video. I'm excited for this one because I've just got so much to go through with you guys. I've got some really crazy trades going on right now. I also want to discuss things that I'm looking at going forward and what we can expect in terms of market volatility this week. It is a sleeper week. It's actually a really important one. You've got meeting minutes this week and you've got NVIDIA earnings, which those two things will impact the whole market. Now, you might not think, well, NVIDIA, I trade currency pairs. That doesn't have anything to do with me. It actually does, because if NVIDIA is strong, it actually might be kind of a strength thing for the dollar as well. So stick around. We'll be talking about everything here today, everything from currencies, commodities, indices, etc. First of all, I just wanted to give you guys a bit of an update. Here is my current P&L for this year so far. And let me just say, I'm trying to stay calm. These types of results are very, very rare for me to get this kind of performance. And I'm going to talk about what has led to that. I'm going to talk about the recent trades on gold and the indices that I've been, really making some decent gains off of. But before I continue, let me just also say something about these types of periods. Usually I do have good stretches and then, periods of time where I take losing streaks and drawdowns and I'm just on the wrong side of the market. Fortunately, I have been on the right side of the market for a suspended period of time right now. If you look at gold and you look at, the indices, they've been moving up and I've been bullish on both of them. And I've basically just been playing pullbacks and rallies, and it's been easy money making. That being said, I know that will not continue forever, and I am also fully prepared for this win streak to end. In fact, I expect it to end. I do not usually have so many months in a row that are profitable. So just to add some numbers to this, you can see that I'm averaging about 1 to 2% per month, except for May. May has been really good with this recent gold trade. And you can see, so that's 1, 2, 3, 4, 5 months, and then 2 additional December and November, which puts me at 6 months in a row. I'm sorry, 7 months now in a row of making profit. Now, that doesn't mean that I haven't taken losses along the way, but I am on a very long stretched win streak, and that should definitely be celebrated. But also, it's normal to expect for this to end. I do not usually have. You can see if I go back through some of my years here, I have months each year that are red. In fact, 2022 was a tough one for me. 2021, we had 5 losing months. And 2020, we had 2 losing months. So I am expecting to at some point have losing months on this. But again, while the winning is happening, I'm just going to let it keep going. And I'm certainly not complaining. And by the way, last thing I'll say about my recent performance, I've been recording every single trade I take inside of our Discord, not just some of them, every single trade that I take in that trading account on WeBull. I am, putting all of it into our Discord channel when it happens. If you'd like to get those notifications, you can join the free Discord down below. That won't include the alerts, but if you do sign up for VIP, you can get access to the alerts and you can see all the trades with full breakdowns, analysis, and everything else with each one of the trades. So now let's talk a little about some of the positions that I'm in, and the big trade that has really contributed to recently the month of May becoming, a 40K month here is gold. Gold has been just on a rip to the upside, and this is the second trade of the year. Well, I should say the second sequence of trades in the year that I've taken. So I caught towards, beginning of the year, a huge rally in gold around this point. I entered long, and I put out a whole video on that. You can go back in time if you'd like to go see. I took longs on that, and that contributed to a lot of the gains this year. I rode it for almost this whole move, and then I re-entered here recently with a pretty aggressive sized position, because I loved this pullback area. I love the story for gold. I'll talk about that in just a moment. But from a technical perspective first, I initially I started the trade right around here. I went long one time, and then we had 3 different total entries to this trade. So the market ripped off of that and came up to resistance, and I said, okay, I'd like to see that one break. And then it broke. And then when it broke, I said, okay, if it pulls back, I'm going to look to add another trade here. And so I did that. I added a second position, and then market ripped again, price pulled back. I said I'd like to add another position, and we're off to the races here on Thursday and Friday. So this trade is really going well. I'll show you, here is GLD, the ETF that I'm showing you. And don't worry, I'm not just showing you just to tell you about how great these trades are and how much money I'm making. I also want to just talk a little bit about conceptually what I do in this situation. Because as you can probably imagine, when you're floating, really good gains, there's the temptation to just take profits. And I know that in my early trading days, I had a lot of difficulty holding on to a trade like this. In fact, I probably in my early days would have taken profits over here, right? I would have said, oh, it's made a move up to resistance, close it out. But remember, good trades, when they really want to go, they're really going to go. And for me, as a swing trader and as a trend follower, I trail stops. So you'll notice that my risk management on this trade is I have stops trailed into profit on 2 out of the 3 positions. So this third trade is still a pending potential loser, and this market could totally reverse. But my reason for the stop loss being here is that I would like to give some room for gold to continue if it wants to. I really like the fundamental setup. Speaking of that, let's discuss gold, and I'm going to talk about the fundamentals. Last thing I'll say about the technicals, would I add a 4th time? No. At this point, gold is 45% of my my trading account capital. The way I trade, because I trade on a stock brokerage, I own shares. So GLD is currently 45% of my entire account. That's about where I want to max it out. That's honestly way more than it usually is, but I've really liked the trade, and the trade is floating in profit, so I've been able to add into a position without taking any, I'm reintroducing some risk when I add new trades, but the overall trade is well in profit. I will not lose money on this position, which is a really good spot to be in, and for me, that's when I do like to add. But I do like this technical reversal if it does pull back there, the potential to add, and if I did not have so much capital already parked in gold as a position, I would consider it. I'm not telling you to do that. I'm just simply telling you my own trading strategy and my opinions. So let me get into the thick of it here with the Edge Finder. Now, I know this is going to sound like a sales pitch, and it is, but it's also genuine. I took the Edge Finder and I looked at it and I said, okay, gold has just raced to the top of this list. I need to watch it. So 90% of the credit to this trade goes to the Edge Finder. Now, I'm not saying that the Edge Finder told me to take the trade, because I still set up the position. I still, did my technical analysis. I still found the entry point, the stop loss. I managed the trade. There's so many things that the Edge Finder did not do. So maybe 90% is too generous. But the whole reason I looked at gold was because the Edge Finder. The Edge Finder gave us a very bullish reading. What does that mean? I'm a firm believer that for my friends who are watching who already have a copy of this software, you need to understand how it works and functions so that you can still use it as a resource. But it's not the Holy Grail. Nothing is. I just want to say that, but I also want to point out that this trade was very much helped by the Edge Finder for me. So gold gets very bullish, and I say, why is that? Well, let's look at some of the recent economic data, and we can actually pull up, this is a cool trick if you have the Edge Finder, go to Data Scanners, go to Gold, and check this out. So the Data Scanners Gold page will show you every independent piece of data that contributes to the overall score. So for example, the Commitment of Traders data overall is very bullish on gold. What does that tell us? And we'll look at COT data in its entirety in just a moment. But this is showing us that institutional money is very bullish on gold. And by the way, they have been for a while, so this is pretty cool. They have way more longs than they have shorts, and they week over week, they actually increased longs even more. So love this. Bullish on gold if I'm looking only at the COT data. But don't do that. Don't be a fool and overvalue one singular metric. And I'm calling somebody out who's watching this video. I know it. I know that some traders out there, they just say, oh, I just use technicals plus COT. No, stop. Don't ever do that again. There's more to the market. There's more to the Edge Finder. There's more to fundamental analysis than just saying COT is long, so I'm going to get long. It is useful, don't get me wrong, but it's not the Holy Grail, and it's not the only thing you should look at, because sometimes institutional money gets it wrong, believe it or not. The COT data sometimes is just on the wrong side of a bad trade. A quick example of that is in the S&P 500. They were short in 2023 for most of the year. as the S&P 500 ripped higher all year long. So don't overvalue any singular indicator. This is what the Edgefinder specializes in. It believes, I believe the best way to analyze the markets is use as many valuable data points as you can to build bias, not just overvalue one singular one just because it sounds fancy. If you don't understand the rest of these things, that's another thing I see people saying. Sometimes they say, oh, I don't really understand all that, so I'm just going to focus on the easy ones. That's laziness. Don't do that. Let's go through it together. Okay, so the commitment of traders data, we're on the same page. Retail sentiment, that's an easy one. Retail is short. We take that as a contrarian bullish signal. Okay, seasonality. What about seasonality? Seasonality this month, the current month, month of May, over the last 10 years averages 0.63%. Okay, that's bullish. The trend, we don't even have to look at the chart. We already know the trend is up. Inflation. Well, what about inflation? What are the stats telling us? Well, check this out. Inflation previously was 3.5%. It came down to 3.4%. This is good for the story for gold because this will mean, hey, the Fed may cut interest rates. Well, what about core inflation? Core inflation also came down. That was great. Month over month, it was a nice decline. These are good things for gold because, again, rate cuts are a good thing for gold. Interest rates, we could see interest rates came in, they basically have not moved. I'm going to ignore this signal for a second because this basically yields on the 8-day moving average, haven't really moved too much. GDP. Okay, what about GDP? GDP is an obvious one. The previous forecast was 2.5%. We only got 1.6%. And I'm going to show you that chart just for reference. You can always find each one of these data points on the Edgefinder independently. GDP came in expected 2.5, we got 1.6. Okay, so you could see a cooling economy. Remember this, in a cooling economy, that is a positive thing for gold. So GDP cooling, services and manufacturing PMI, I like to look at the full pages, so I'm just going to show you them. Services and manufacturing came in light. Okay, go back to gold and look. Services and PMI giving bullish reads for gold because the cool down in the economy is considered bullish for gold because they will likely cut rates. And of course, it encourages people to look for alternatives to invest their money if the economy feels like it's teetering. Retail sales, we also know this one. If we go take a look at retail sales, has come out lighter than expected. That was on Wednesday. So retail sales, these are the consumer spending. What is consumer spending looking like? And if that's cooling down, gold gets a bullish tick. And finally, labor data. Employment change and unemployment both came in lighter than expected. We expected 315,000 jobs in the last report on NFP day. We got 175. So again, we didn't expect 315. The previous was 315. We got 175 in the latest, and unemployment also ticked higher. So these things are bullish for gold. Now, I apologize if that was a lengthy and boring part for some people, but I also don't apologize because if you want to be a fundamentalist, then I just hopefully broke down some stuff that was helpful to you. So gold, long story short, was a bullish reading. And when we got that signal on the Edgefinder, I pulled up the charts, I found that entry. And again, that entry with the help of the Edgefinder has earned me currently a floating P&L of $14,000, which is, a big number. And I just want to say too, that those kinds of numbers may seem ludicrous to you, but I could tell you 5 years ago, this number seemed impossible to me too. And again, I'm not trying to, I know this comes across as boasting a little bit or something like that, but I promise I'm not trying to flex on you. I'm trying to just tell you that as a trader, these numbers are eventually attainable. It's just going to take time. I've been doing this for almost a decade. So please understand that good things take time. And so just because I see a number from me and or an influencer that's earning more money than me, there might be people who are out there making $100 grand on a trade. But don't compare yourself. It doesn't help you. Ignore the dollar sign for a second and just think about, this trade, how we executed, and how, you may be able to find similar ideas in the financial market. Okay, so I want to talk a little bit about the dollar index for a second, but before I do that, let me go through the COT data as I did promise I would do that, and I don't want to forget. So we're going to go to sentiment, we're going to go to COT. And also, there is a link down below in the description if you'd like to try out the Edge Finder for 30 days. There will be some information down there. And also, if you'd like to pick up a copy of the Edge Finder, if you just want to go ahead and have it before the next week, you can get access to our software. My company, A1 Trading, specializes in building tools for traders. We dedicate countless hours to building what we believe is the best stuff on the market right now. And if you'd like a copy, use code YTVIP down below in the description. And if you'd like to sign up for 30 days access to the tool, you can also find that link below. Okay, so let's talk COT data for a second. Overall, gold, the Nikkei, silver, the Dow Jones, US oil. These are our most bullish overall, proportionally wise. So we can hover over these if you are looking here, 88.8 long, 79.15 long. You can see the long to short percentages here. Now, on the flip side, we have CHF, JPY, CAD, Aussie, the 10-year government treasury bond as the most shorted assets on this list. Then if we scroll down here, now this is, I always mention this, so bear with me if you're a regular. This data here is the kind of big picture positioning. This big picture positioning does not change very much. It changes very gradually over time. And so we usually call this kind of the long-term indicator for COT data. It's not super useful if you're a trader. Let me go ahead and say this right now. If you are a trader and you're only using this data, it's probably not going to help you very much because this gradually changes. Like it might move like 0.5% per week or something, and that doesn't tell you very much. But what does tell you more is this table down here. This table we've built allows traders to see the latest week-to-week filings of the commitment of traders data in depth. Now, why? Why does that matter? Well, it shows you the latest changes that are the most significant. Because if you see the overall changes being so gradually and they don't tell you much, okay, fine. But what about the ones that are moving the most? Which assets are getting the most institutional buying or selling? And let's keep it simple. So I'm going to direct your attention to two columns, the net change column and the asset column. And really, this is like most of what you need here. The JP225 saw a huge increase in net positioning to the long side. In fact, if we break this down, they reduced a significant number of short contracts, and they also just gradually reduced their long contracts. But again, the net result of this closing of positions was way more weighted towards closing shorts, so we got a significant bullish shift. That's how you can read this week over week chart that we've built. So the Dow Jones also, they closed a lot of shorts, but they massively increased long contracts. This is, of course, using the futures market, and that is a significant increase on the Dow Jones. Very interesting stuff there. Platinum, 6% net percent change. The 10-year government treasury bond also saw significant change, and this is great for a positioning of mine, which I am long on the TLT. We'll talk about that in a moment. SPX, they sold. CHF, they sold. Aussies, they sold. NAS 100, they sold. CAD, they sold. Okay, so there you go. That is the latest week over week COT filing. Remember, if you want a copy of this, you can get a link down below in the description that will help you either purchase a copy, or if you'd like to purchase a 30-day access, that is something available below as well. So let's talk a little bit about the dollar here. So the dollar on a daily chart is painting a very interesting picture. And in my view, and in my opinion, the dollar looks bearish. It looks straight up bearish. And here is why. For now, by the way, things could change in the next few weeks. But for now, here's what we're looking at. We've got a series of higher lows, higher highs for a little bit there. But then we broke that structure, and really this candle right here, guys, this was NFP. So NFP comes out and the jobs data came in real light, and it just kept going from there. So we had GDP numbers that came in light, PMI numbers. Remember I showed you those charts on the Edge Finder. This data has been coming in light, and it's what's causing the dollar to drip lower. Not institutional manipulation, not fancy price action, no. Fundamental data is why the dollar has lost its steam. Please don't get it twisted. In my opinion, it's laziness to just say, manipulation, market's just scooping, whatever you want to say. The reason the market is trending lower now for the dollar is because the data supports it. And how do I know that? Well, all the big moves happen perfectly in line with what the fundamental data tells us. So when you get, again, a big NFP number or a big key CPI number, those cause the biggest moves in the market for a reason. It's because they matter the most. Fundamentals are so key, and that's why we spend so much time. Why else would I learn, so much about this stuff if I didn't truly believe that it is the most important component to the market? Anyways, the dollar index breaks this key level support, and this is really where things look bearish to me now. You've got this big level of support that the bulls were holding on to. It broke here on CPI day and then started to pull back here. So as it pulls back, in my view, the dollar index looks pretty weak. Now, the reason I am long gold is also because of the dollar weakness. In fact, that's a large component to why I actually am short the dollar long gold by being long, XAUUSD or long GLD. So I already am kind of positioned for this. However, short positions on the dollar could be interesting if you do see this. And also, I'll go over one more position I am straight up bullish on that is benefited by a weaker dollar, and that is TLT. So if I go TLT, I am long TLT. And what we can see here is I'm in the red a little bit on this trade here, but I believe that this has some upside. TLT is long duration government bonds, and long duration government bonds will likely do well if the dollar index comes down, because the dollar index comes down. It likely also means that yields are coming down as well, which they have been recently. So if yields continue to trend lower on weakening economic data or expectations that the Fed will cut interest rates because inflation's coming down, if that's the story that we're going for now, and I think that there may be, if we take a look at the 20-year yield here, and I know not everybody trades this, we're coming into a really interesting spot. We're hitting this trend line, but also if you zoom in a little bit here recently, you've broken this one. So interesting little spot here. Come down off of the highs here. We broke through this level, very nice, but now we're finding support here. If we can break this longer term trend, I really think we have some good downside move coming for yields. And I do think that this is possible, because what this would be telling you is the Fed is going to cut rates this year. And in fact, let's take a look at expectations for that. Okay, so we're taking a look at the Fed Watch tool, and what we can see here is that the expected first rate cut is now hovering somewhere around September and November and December. So it seems like there's a possibility right now for 2 rate cuts this year. 1 to 2 seems like a very reasonable possibility going into the end of the year. And that is evident by the economic data that we've seen slowing down. And so right now, I think 1 to 2 rate cuts seems very possible. And that keeps me relatively bullish on TLT, gold, technology stocks, things that are more sensitive to interest rates overall. And as we take a look back at the overall top setups page on the Edge Finder, we have gold, we have the euro, we have bonds, and I'm long on 2 out of 3 of these, right? I'm long TLT, which is, kind of the same general concept. Gold, I'm also long. And then, I also saw this signal on oil. I took a loss on oil trying to short it last week. I may step up to bat again to try that one again. But again, you can see pretty unanimously, you've got a lot of dollar bearishness on the Edge Finder right now because, again, economic data is really painting that picture, whereas everybody thought that the U.S. economy was impossible to crack. It's showing signs of beginning to cool off. It doesn't mean that the economy is going to go into a full-blown recession, but it's possible, and that's also why I have a pretty good-sized long position and pretty bullish bias on gold. Is we're getting all the right signals for, if this slips more into a possible recession story, gold, in my view, will be better off than perhaps just being long stocks. But speaking of stocks, I am also long stocks, so let me show you where I'm at. So S&P 500 ripped through the highs and looks incredible. And my entry on stocks looks incredible because I'll show you here. My position on VOO right here is looking really, really good right now. So I picked up VOO on the pullback here. And if you're wondering, Nick, why haven't you talked about this position? The answer is I have at great length. But let me quickly just update you on how WeBull works. So I sold puts to get into this position. So I sold puts down here when the market started selling off. I eventually got assigned as the market came down here. So now I own the shares, and I had a covered call that I sold around 480. Okay, so I sold calls. So let me paint the picture here. And the way WeBull unfortunately works currently is that when you have positions open that are options trades, you can't see them in trading view. So unfortunately, I've been in this trade for some time, and if you're in the Discord, then you're well aware. I've shared this trade several times and talked about my bullish position. But I did make a recent change. So now the reason you can see it is because I ended up on Friday, I believe. Yes, Friday, I closed out of my calls. So I took losses on the calls that I sold here because I sold them way up here, and I didn't think that the market was going to rally so far. So I was wrong about that, but I was right about being bullish stocks. I absolutely got a great entry point, and I decided I'd like to keep the shares because of the story being painted right now. You have inflation cooling, you have earnings that are strong, things look decent. And here's just a little context for the trade alert that was shared in the Discord. So VOO covered call update. Basically, I decided to close out my covered call for a loss. And that would mean that I get to keep my shares instead of them getting called away. Without getting too far into options, covered calls basically if you sell them against your existing position, you are basically saying, I will sell my shares at this price, no matter where price is at on expiration date, in exchange for a premium. So instead, I decided I wanted to keep my shares, so I'm in a great position overall, but I took a loss on the calls that I sold. That being said, long story short, I was bullish in the indices on the pullback. The pullback ended up being really crystal clear, perfect. The entry looks incredible, and now I just have to kind of manage this position. So what am I going to do with it next? Well, currently, I'm going to wait to see if this market wants to continue to melt up. I may look to sell covered calls again, but I'm going to hold my breath on that because now things just look real good for stocks overall in my personal view. I'm in a really nice position on this one. So my thought process is, if you get pullbacks, I may even add to some other indices long positions, but I'm just going to wait on this one because, again, I'm not getting a ton of confirmation from the Edge Finder. It's neutral on the Edge Finder, so I'm just holding this. And also the trade itself, the reasoning for the entry was for a different strategy that I use, my mean reversion strategy. Stocks on a short-term basis looked oversold around here, so I got into the trade and now just holding on to a winner. So yeah, that's kind of where I'm at with this position overall. Let's keep going. I want to talk a little currency pairs here. Let's take a look at Euro USD. So the euro having a bit of a relief rally with this weakness in the dollar that has now formed. We've broken out of this resistance point and seem to be off to the races. So looking good so far. We'll see how this one wants to go. If it does pull back, in fact, the Edge Finder is giving us a bullish reading on this. I might even pick up a position if we do see that. So it's something that is on my radar for sure. As we can see, again, it's on the top setups page here. I forgot to mention this earlier, by the way. If you guys would like to be able to trade directly on TradingView, all of the brokers that are linked down below in the description will allow you to do so. I find, I made this switch, I don't know, maybe a year and a half ago. Whenever they introduced WeBull onto TradingView, I was able to trade directly. Now, WeBull is a great option if you're in the US, and there is a link down below in the description that will get you free shares when you sign up. If you choose to use that, you'll also be supporting my channel. But I want to add something else to it. If you're not in the US, there are other brokers that will also allow you to trade directly on TradingView. All of them down below in the description will do that. And it is so convenient. So let me just show you some handy tricks. If I want to pull up gold, I just click it, right? And I can actually enter positions. So I can trade, create new order. The market's closed right now, but you could see the idea here is I can execute trades directly within TradingView, which is so convenient as it's where I personally do a lot of my charting, and I imagine a lot of you guys do as well. So again, if you are looking for a new broker, check out the links down below in the description. You'll also be supporting the channel, and most of them have great sign-up perks and can be traded directly on TradingView. So just wanted to mention that. Our next currency pair that is kind of defying the odds here is the pound US dollar. Take a look at this. The British pound has really shown some strength here recently. And in fact, it took me back. I was thinking about the pound, some of my best trades that I've had on the channel over time. And there's this one video that I have that I was watching back because it was such a fun time in 2022, I think, when I was trading currencies so heavily during the dollar rally. And there was this one point where the dollar rally started to fizzle out, and I actually went long the pound USD, and I think I made like near $10,000 on a pound USD trade. It was really awesome, and I loved watching the video back. One of the coolest things for me, just side note, as a content creator in this stuff, is I can go back and watch myself, what I was thinking, trades that I was looking at, what the fundamentals of that time were. It's such a fun little case study you could do. Anyways, current setups on pound USD. I believe we're also getting a bullish setup. Yes, +9, very bullish reading on pound USD. This one also looks interesting. So I actually have some currency trades that may look good this week. Pound USD longs, Euro USD longs. I like these. Again, dollar looks like it is short term on the weaker side. And so if you get either on this one, either a pullback to 1.2550 looks really interesting for me, or if I get like a break here and then a retest, I also like this current level here. So I'm bullish on the pound. This looks really good. I would like to see if we can clear this level pretty decisively or pull back into this zone for a possible entry. Dollar yen, this one's probably not going to be super interesting. Yeah, it doesn't have a strong reading on the edge finder because the yen to me also kind of looks weak. So I'm going to probably skip that one. Dollar CAD here, I pointed out this level on stream this week. Dollar CAD's getting a very bearish reading, but I'd be very curious to see if we can break this level first. If you break that level, then you pull back, you're probably going to get setups at the same time on USDCAD as pound USD, if that happens. So I think that actually might be an interesting couple setups for currency pairs going into this week. And yeah, very cool. Also, if you're in the US looking to trade currency pairs, there is a broker that's down there as well that might be a good fit for you. It's OANDA. I've used them for years. They're regulated. That's what matters. Again, and there's some welcome bonus, I think, or sign up stuff that's down below in the description for you. Okay, guys, that's going to wrap up the video. We've done 30 minutes here. If you made it to the very end, guys, comment really quick. I made it to the end. Let me know. I'll try and heart your comment. I really appreciate you watching my videos. It does mean a lot to me that other people share this passion, that we can do this together every week. It's just absolutely awesome. Have a great trading week ahead, guys. Trade safe, and we will see you back on the next one.